30 of my own students to the Gambia, and then sponsored through our philanthropy program an average of 15 to 20 Gambian participants to actually become students, even if they were not necessarily students, but they may have been business practitioners. Sometimes we had beach boys, fish vendors, oyster collector, women oyster collector, you name it, they have been part of that journey with us. And what has been the result over 10 years has been that 47 new SMEs were created, 80% led by women, and 67% of women employees were involved. Now, when we're talking about policy making, and I recall one of the points made earlier today by one of the speakers was that sometimes we struggle to connect or understand how policy translates into practice and potentially profit. These are examples that are obviously practical examples of how collaboration can lead to that successful endeavor. So, and not only we change myths and misconception about obviously the continent, but we actually build pride and we build awareness besides the skills that very often are required to develop the programs. Another program that, for instance, has been very successful has been the Art and Craft for Sustainable Tourism Development in West Africa, where one of the findings we had throughout some of our research, and actually it was one of my PhD students who did that piece of work, was that one of the problems that was actually being encountered by women artists was that very often they would not move from being emerging to become established. So what we created was a pathway through a project called Building Bridges Through Contemporary Arts, where we try to bridge the connection between international galleries, maybe in Europe or in the US, and regional galleries in West Africa. And of course, with people like, for instance, Joanna Chomali or Modupe, phenomenal women artists, the first one from Ivory Coast and the other one from Benin, we actually created an initiative that started mentoring women artists and creating a pathway for access to the international arts market. And guess what? Joanna herself, who was, when I met her in 2019, was actually an emerging artist. Today became the first Ivorian to actually, and first African woman to win the Pickett Prize at the V&A in London, which again was like an international competition, because what we got in the art sector, for instance, was very much that the inclusion aspect was within Africa-focused exhibitions rather than globally focused exhibitions. So obviously, there was almost like a kind of exclusivity even in the art sector, saying, well, we're going to actually, if I'm Italian, I can actually exhibit in any exhibition, but you're African, you have to actually do it in your African arts exhibition, which made absolutely no sense. So we've started changing that kind of narrative. Other examples, for instance, was when I spent some time evaluating a program developed in Masai Mara by an organization called Basecamp. This was about 14 years ago. I continue working with them, but I think this is an example which I often use to show people how when in Europe or, let's say, global north destination, we started talking about circular economy, right? In this part of the world, circular economy was well practiced many, many years before, actually in a very creative way. So sometimes it's about shifting the arrogance as some practitioners, including academics like me, start talking about issues and actually giving voices and giving spaces to entrepreneurs, like, for instance, these women from the Basecamp Foundation program, which were doing, as my guide Agnes said to me, they were doing good out of waste, and they managed to sell tourist garbage back to them in the format of a keyring made out of the mosquito repellent bottles, right? So it's about creativity in a lot of ways. Now, there is another element which very often and is interesting, because also the theme of this conference, which you're very familiar with, is inclusivity, what is the second one? Is escaping me. But anyway, and then you've got sustainability at the end. Very often what happens is that sustainability is perceived as being the environmental aspect of it, when in actual fact, sustainability is about the triple bottom line. You know, there is the three-legged approach, the three-leg stools of people, planet, and places, obviously. And for instance, I am a member of the the World Economic Tourism Ethics Committee of the UN Tourism. And one of the aspects that we are looking at as part of our program is how under Article 9, we actually figure out how to make sure that employment is fair employment. Because if we talk about inclusion and financial inclusion in particular, we need to make sure that actually financial inclusion doesn't mean paying a member of staff in an hotel the bare minimum so that they can feed their children, but very much the opposite, actually giving those people the opportunity not only to get their fair pay, but also to be able to then increase their income generation progressively through a career path. And this is another aspect which is often ignored in some of the policy making that very often are made. And I mean, in the Global Code of Ethics for Tourism, for instance, the issue of women is their presence pretty much permeating across the 10 principles, but labor engagement very often is a bit left on a side. Most of the attention is given to climate change, when actually climate change and access to resources affects women more than anybody else, particularly those working in agriculture. So, in a way, there have been a number of other aspects which I've been involved in, and one thing that I'm keen on actually mentioning is a recent piece of work that I've been involved with. Because when I talk to people about financial inclusion and tourism, basically what happens is that people think, oh, well, okay, you know, people can travel, and of course through travel, people can donate, right? They can give scholarship fees to kids, they can actually help clinics and stuff like that. And that is actually I would say, part of the ugly part of the tourism sector, because instead of professionalizing the sector, very often we believe that by giving donations along our travel, we can solve the problem of financial inclusion. And I can tell you that that's probably the worst that you can probably do through travel and tourism. And I've seen this primarily being let's say, white Western tourist problem, but with the growth of the diaspora, the African diaspora coming to Africa, I can tell you that that problem is getting incentivized even more. So where Western practice of giving without having a rationale is creating more problem than anything else. So in fact, there is one thing which is very interesting in this book that I wrote with my colleague Amy Scarth, which actually came out last week, highlights very much information and findings from the problem of looking at what financial inclusion should really mean and whether the travel philanthropy system could be one of them, one of the financial tools. And the question we ask is about, do travel philanthropy do more harm than good? Does doing good while traveling truly have the major impact we all hope for? And what if beneficiaries were not as passive recipients as we believe with? We did this work in Zimbabwe, Ethiopia, and Uganda, and I can tell you that some of the responses we got, and that is one of the quote that you've got there on the screen, comes from one of our respondents, where actually travel philanthropy in some of the villages is leading to a generation of beggars, prostitutes, beach boys, and I could continue with the list. And this is what local people are telling us. So again, you know, when we give for granted that doing good, right, is something that everybody believes to be a good thing, right? Nobody would question when there is the good intention. But doing it well, it is a different story. And so that's why when we talk about supporting financial inclusion, we need to look at initiatives which are truly empowering and truly engaging. And that's why, for instance, an example that I'm using here is work I've been doing in collaboration with Swansea University of Technology, which is one of the reasons why I'm here today, where we've been working in collaboration across Kenya, South Africa, Ghana, and now Zimbabwe, looking at how to empower youth, women, and men to actually look at the travel and tourism and hospitality sector as a career path, but a true career path. Because one of the questions that we were asking ourselves is, are we producing a generation of tourism and hospitality graduates which are unemployable, underemployable, or seeking employment in another sector? Right? Because this is what is happening. You may have the most qualified person in the subject, but then they end up having menial jobs in a sector which don't pay as much as they should. And all because of reflecting the global system of making sure that the holidays stay cheap, right? But who suffers are the local people. And there is a systemic failure that needs to be addressed in order to have done that financial inclusion and empowerment we're talking about. Because the statistic talks very clearly. You know, tourism is growing. You've got in the African continent, there is a very, very large majority of youth and women, but yet there is a disconnect between the opportunity that exists and actually the work that you may be able to do in order to move forward. So the work, you know, somebody mentioned today the issue of South-South peer-to-peer collaboration, which has very much been at the center of the work we've done under the British Council project and the Liverpool project that TUT and other organizations across Kenya have been working on. And the idea is, the call here is to actually make sure that we have African young change maker programs, which actually not only create that acceleration that we're all calling for, but they maintain actually the incubation through networking and peer-to-peer collaboration with the right containers. You know, there is an avalanche of money very often being pushed into projects, but the reality is there is very little monitoring and evaluation. And therefore, one of my calls is, let's try to monitor and evaluate and kind of map those successful stories that could really help. And in fact, you know, one other aspect, you know, when we talk about engaging and training the new generation, the right generation of tourism and hospitality professionals, interestingly, I mean, this picture that I took with the TUT PhD cohort shows, you know, the percentage of women engaging in the subject and willing to actually become expert in the subject. But this is not unique to TUT. This is actually a picture you will see in many, many other parts across the continent. And again, it's about entrepreneurship. It's about making sure so we don't leave boys behind, because what also is emerging from a lot of the projects across the continent is that actually there is also a feeling of disheartening by young men who are actually feeling they're left behind, because a lot of the concentration is either on primary education or women. And the risk there is that obviously by creating that disconnect and then gender imbalance in the other way, we actually go and impact on also cultural setting and cultural norms that actually will give disequilibrium in socio-cultural context in which we operate. So more work has been also in terms going into transferring the knowledge that we acquired over the years into other institutions. So for instance, at the moment we're working with the Women University of Africa in Bulawayo, Zimbabwe, to try and find ways to cooperate with some of the communities. So for instance, an example is we're trying to engage in the plastic-free agenda, where women play a very important role, where our ambition is to have Zimbabwe totally free of plastics, and hopefully one day we'll have South Africa free of plastics, so none of you will have those plastic bottles in front of you, but rather a beautiful bottle that has been produced out of waste and which you can refill and contribute to the climate agenda. Because there's no point of talking about sustainability if we continue having small items like shower bottle in our hotel and then plastic bottles and major conferences talking about sustainability. So, a couple of other examples. This is another last one, and this is about creating opportunity for women to look at other women succeed. right? And the quote that you have there is a quote from Namelo, which is one of the students from Nashulai College, which I met a couple of months ago in Masai Mara. And she said to me, thank you for actually sharing your experience on how you became a tourism expert and actually a professor. Because all I wanted to do is to get the basic skills and go to work in Dubai, when actually I've got the promised land at my doorstep, which is Masai Mara. And so again, it's about creating those opportunities of exchanging and inspiring each other. Because again, an example here, which is very clear to me, is most of my inspiration over the years comes from my former students and my colleagues. So for instance, the one in the middle, my dear former student and colleague, Dr. Kamini Bijiro, who unfortunately left us through cancer last year, she was saying, you need to leave a mark. And that mark needs to be indelible. I can't say the word. It needs to be there forever. And the funny story is that those people, like Catherine, who took me to Africa for the first time, are the people who have left that mark on my profession and has made me who I am today. Which is where I think, when you are asked to do a bit of a talk like this, and I'm concluding, so don't panic, I'm on time. We actually get to a point where people look at you and look up to you and say, oh, Professor Novelli, you're so good, I would like to be like you. And when they say that, my answer is just look what you wish for, right? But not a lot of people see the other side of the coin, right? Illness, distance from family, the last picture in that slide is me holding my dying mother, right? Which I just arrived 24 hours before because I was working in Africa, right? But on the other side, I just traveled from collecting that Africa Impact Award. So sometimes as women become kind of cut in between realities of care. And let me tell you another thing, and these are like where my conclusion and call are, because then we go into the good, the bad, and the occasionally ugly. Very often, people look at your successes, right? Opportunities, the sharing knowledge, the fantastic opportunity. A lot of my friends think that my life is glamorous because I travel all over Africa, but they don't know how difficult it can be sometimes. The bad is that very often as women find what we call it imposter syndrome, right? We feel like we're not adequately prepared. Why am I here? Should I be here? We feel rejected. And let me tell you another thing which is interesting. There is an impact on personal life that many people tend to ignore. And very often, as I said before, the gap that exists with women is very often women refer to the inclusion because women need access, particularly when they've got children. So the care is for children. When in actual fact, women have got a lot of other caring duties, even if they don't have children, right? Culturally. I come from southern Italy. It's not very different from the African continent. And if you are a single woman with no children or a divorcee or somebody who have not kind of tickle the boxes of being a woman, particularly working in this part of the world, you are kind of stigmatized. There are a lot of myths. And the other thing, and this is where the antagonism comes, is the antagonism that comes from other women. If you are a successful woman, right, a lot of other women won't like that. How many of you have experienced that? Yeah? So, and we don't talk about this enough. Because if a boy or a man or a male professor get an award, all his mates are going to be cheering. If a woman gets an award, let me tell you, So we need to talk about these things and denounce this, because us women can be the worst enemies of ourselves. And that's why we don't move fast enough, right? So the bottom line, and I'm going to close there, is that in terms of few final remarks, and again, there's a lot of content there. I'm happy to share my presentation if needed. The bottom line is about making sure that we look at those specific targets. Adolescent girls are to be at the focus of anything we do. There is also an element of private sector partnership, and where universities and organizations like international organizations can play a big role in is actually creating those hubs and those mentorship schemes to actually create that advancement and that moving forward. And then again, the issue is making sure that if we feel that we don't fit well in a specific space, we do something to change it. As I said earlier, if you have experienced any of those ugly or occasionally ugly aspects, whether you're a male or a female colleague, you should really do something about it rather than being quiet. And my call, to conclude, my call today is to our fellow women to stop apologizing, first of all. Very often I find my colleagues, and this is the advice I received from my own mentor, a lot of women, before talking, they say, I'm sorry, or excuse me. Do you hear other men talking like that when they start saying something? No, they are assertive, right? So stop apologizing. Be bold, right? You've got great ideas, and you need to stop feeling less important or less adequate. Be fearless, because sometimes you have to be fearless. You need to actually just be absolutely not worried about saying the right or wrong thing. And be human. You know what? The be human element is what makes us winners. Because we can relate to people. Our psychological openness to be more open to understand our audiences, our colleagues, is much more advanced. And there are studies to prove that. And most importantly, be kind. But most importantly, be kind to yourself. Because as women very often are not kind to ourselves. Thank you very much.
Thank you, Prof. Let's just start with acknowledging our Honorable Deputy Minister, Ms. Mapasika Litsike. I'm told she is here. Properly, please. Thank you so much. I'm going to ask all the presenters to kindly please come in front so we don't have to wait, at least sit in front. Once you're done with the presentation, if you can just stay here. We know we're running out of time. We promise we will not keep you long, Minister. We'll try and keep it very short. The next paper is on the alternative collateral approaches for closing the credit gap for women in agri-food system. I'm not going to call the presenter because I'm told they are co-authors. I have her right in front, behind me. Please welcome her. If you can just introduce yourself.
So thank you very much for the invitation to come to this event. I'm Ilaria Sisto, and I've been working for over 35 years for the Food and Agriculture Organization of the United Nations, FAO. And I've been working on gender and women's empowerment for most of the time. The paper that I would like to present is based on a study that we conducted with some colleagues on what could be some alternative collateral approaches to help closing the gap that women face when they don't have the collateral to access credit in agri-food system. In my presentation, I would like just to give a short introduction. I would like to present some of the successful approaches that have been adopted by FAO, the World Bank, and many other organizations, and also conclude with some recommendations, especially for policymakers and decision makers. We have a more comprehensive study that presents all the details of what I will shortly introduce now, and that's a publication you see there in the corner. First of all, let me explain what does it mean financing for food security and nutrition. Every year, FAO collects the data about the food insecurity and malnutrition in the world. And we have seen that in 2023, between 713 and 757 million people, they represent between 8.9 and 9.4% of the global population, were undernourished. And this represents an increase of 152 million compared to 2019. And the situation of food insecurity and malnutrition is exacerbated, especially due to conflict. We have seen in many countries, and we are facing so many challenges, also related to climate change and also the economic crisis. And this is also related to the fact that people don't have access to healthy diet, and people are facing a lot of sorts of discrimination and inequality. Also, the data shows that the most affected, we know, are women, are youth, and indigenous people. And we have also analyzed last year how much of the funding is actually directed towards ensuring adequate food and nutrition. And when we look, for example, at the data in 2017, 2018 of the total climate finance, we realized that only 3% or less than 3% were invested in agriculture. And when we look at how much has been reaching really small-scale producer, the percentage goes down to 1.7%. So the situation is really very dramatic. When we are talking about financing for food security and nutrition, what do we imply? We want to make sure that we have enough financial resources so that all people have access to safe, to sufficient, and to nutritious food for conducting an active and healthy life. And we need to see how we can actually strengthen the resilience of the agri-food system and try to address what are the underlying causes of inequality. And we have seen that the access to finance is still a huge constraint. When we focus more specifically on the status of women in agri-food system, we analyzed, last year we published a document on the status of women in agri-food system, and we have seen that 38% of the working women are employed in agri-food system, either as farmers or traders, retailer, hired laborers, and many other roles. But when we look at how much we have been able to reduce the gap, we have seen that still very often women have less access to land, to all types of inputs, to services, also to digital technology, and also that they are facing a lot of different forms of discrimination, because you are not only discriminated by being human, but if you are human from an indigenous community, if you have a problem with disability, if you are poorly educated, if you are poor, and so there are many other factors that you have to take into account. And this is why we really need to invest much more in financing towards women's empowerment and try to see what can be done to change the situation. This is why we felt that we know women don't have access to land, they don't have access to property, and so that it's a big problem for them to access credit. And that's why we thought it's very important that we define other mechanisms that could be taken into account, that could be adapted to the local context and also to the different needs of the audience. And this implies also that we need to assess what is the education and information level of people. Sometimes we have women who are illiterate, or they don't really know what kind of financial instruments are available. So we really need to invest a lot on this, and some people have already mentioned that this morning. We need to see the data, and there are some countries where it's considered illegal for people who provide services, financial services, to have data disaggregated by sex. So people don't even have the right to know if they are going to target men or women, and there is a lot to be done even there. That's why we really need to invest much more in the data that is disaggregated. Also, we need to train the people who have to provide financial services to really raise the awareness about this issue and try to support any type of digitalization process, and also see how we can contribute to shaping regulatory and legislative framework so that they better address gender issue. Let me briefly introduce the different approaches that not only FAO but many other organizations have been used. For example, there are the group-based approaches. These, for example, have been introduced with the village saving committee or with the livestock market system, where, for example, in the case of India, they have the Self-Help Women's Association, or in the case of Kyrgyzstan, there are revolving funds at village level. And so they try to use these social approaches as a collateral to support women, for example, to purchase seeds or fertilizer to support activity. Another system that has been used a lot in agriculture is also what they call movable collateral registry. And so, for example, people might be able to borrow money against farm machinery, about livestock, and agricultural harvest. And for example, there is a very interesting experience of Ghana that has introduced a Borrower and Lenders Act. They want really to try to improve the standards of disclosure information so that people can better have access to collateral. Another system is micro-leasing. For example, in Tanzania, Selfina has been offering micro-leasing to micro-entrepreneurs to access small working capital. And this is when the leasing company retains the ownership of the asset or any type of property until the payment is complete. Something that is also extremely successful are both either public credit registry or privately owned credit bureaus that can help to monitor and collect information, for example, from utility companies, so that you see what are the phone bills or what kind of information you can find in the social media for trying to build what we call a reputational collateral. And for example, in Kenya, they have used DigiFarm has provided loans using digital credit scorecards. As many people mentioned this morning, also the land rights, and so we really need to see what can be done. FAO has been supporting many countries with the SDG 5, especially with the indicator 581 that looks into land ownership, and we realize that there is still a huge gap between men and women in terms of access to land. And so it's trying to see what kind of innovation can be introduced for the land registration and the legalization of the land use rights. For example, in the case of Ethiopia, an interesting experience is that they're using GPS information for second level land certification that can be used also as a guarantee. Also, there are the credit guarantee schemes. In this case, there is the lender decides to share the risk with a third party. And for example, the African Development Bank is providing a cushion for women who lack collateral, and they provide at the same time also training. There are also gender bonds that are becoming more and more popular that can be really a very good way to help, for example, to raise capital on international markets. For example, the Fideicomiso Instituto en Relación con la Agricultura, FIRA, provides social bonds to raise the capital. There are also others. For example, there is the warehouse receipt financing. For example, when people can harvest the product, they can keep them in the warehouses until the prices goes up, and that's also used as a form of collateral. And there are many others, but I just wanted to share something. And just to conclude, what are some of the actions that also other people have already mentioned somehow this morning? First of all, we need to see what kind of strategy for financial inclusion can really try to be designed in a gender-responsive way so that they can really try to empower the people who lack still any sort of property. Also, we have to see how we can improve the credit reporting system and the regulation. And here, let me say that unfortunately, when you look into this mechanism, in a rural area, the situation is, or remote area, the situation is worse. So that's why we really need to invest much more in this area. We also need to support innovation in credit scoring approaches, trying to disaggregate the data as much as possible. We feel that much more needs to be invested in the human rights of women, can be social, legal, economic, political rights. Continuing organizing a lot of capacity development and awareness raising. Big issue with data. We need to improve the quantity of data and the quality of data because you need to provide evidence for those who have to take the decision. We also feel that we need to develop a better marking system to monitor what is the flow of finance. And for example, FAO has been working more and more on development finance, and we really want to see why only 1.7%, for example, of the money goes, for example, for small-scale producer. Also develop incentive and innovative technology like the digitalization and mobile money system, as someone mentioned this morning. And this can be done only if you work together. That's why we're very happy to be here today. There will be a big conference also coming up on financing for development, where this issue will be brought to the discussion again. And FAO is also committed to stop and to close the gender gap. And our Director General has launched last year this initiative is called Commit to Grow Equality, where we really try to establish partnership and mapping of where resources can be allocated to close the gender gap. So thank you.
Thank you so much. It's amazing. So we keep hearing these gaps. Professor talked about how the tourism is growing, but she said there's a disconnect between opportunities that tourism presents and where women and youth are. Now we're hearing there's a huge gap between men and women that own land. I'm hoping that the Q&A is going to talk to how do we close those gaps. I'm going to ask if we can skip to the Bridging the Global Digital Divide, please. The organizers at the back. The speaker needs to present and jump to the other session. So if you can jump to number 4, the presentation number 4, please. Bridging the Global Digital Divide. Strategies for equitable access to digital technology. Dr. Bridget, if you can just come in front, please. Thank you so much.
Good afternoon. So this paper was written by my colleagues and I. Unfortunately, I'm the only one who's here today. Bridging the digital divide. We're talking about strategies for equitable access to digital technologies for women in sub-Saharan Africa. This study was motivated by the fact that even though there's a rapid increase in digital adoption, women still lag behind. And Africa has the lowest broadband penetration rate of 36%, and also more of women don't have access. There's also unequal digital access, and women's opportunities are limited compared to men, even in terms of entrepreneurship, health, and also in education. The main objective for this research was to analyze the key barriers to digital inclusion for women in sub-Saharan Africa, and also propose some actionable strategies to bridge this divide. The study was a mixed method study. We first looked at the existing knowledge, what is currently known about the digital divide, and then we went on to collect some primary data in order to compare and draw some conclusions. So data was collected from 7 countries: Ghana, South Africa, Nigeria, Ethiopia, Zambia, Tanzania, and Malawi. And we used a thematic analysis, obviously, for this because it was a qualitative data we collected. In terms of the conceptual framework, we used 2. We first looked at the diffusion of innovation theory, and then we used the network society theory. For the diffusion into innovation, it was important because it helped us to look at how adoption can be based on perception advantages. So if you think you have the ability to do something, it's easier for you to venture and try to do it. But if you don't think you have the ability, then you don't want to try. So that's why that theory was important for us. Then we looked at the network society theory that helped us to understand how networks can reshape economic and social participation. And we focused more on access, on power, and on inclusion. By integrating these two frameworks, we're able to analyze the micro, the meso, and the macro factors that affect digital adoption for women. What did we find from the study? We saw that there were key barriers to digital adoption. One of them was infrastructure. Okay, so there's not enough infrastructure in these areas to be able for women to be able to adopt easily. And then there was also the high costs. So it was more affordable for men, but less so for women. And we also looked at the socioeconomic inequalities. Well, women are not as high income earners as men are. They're not as educated as men are in some countries. And also they didn't have digital literacy, which was a major thing for them. We looked at also the urban-rural divide. So the people in the urban areas had more access, they were more literate, and so they were able to adopt more than the people who were in the rural areas, which was more like a 30-40 adoption. And then we looked at the gender norms, our perception of women, the role of women, what women are like. Those also became some barriers. I remember one of the studies, a lady from Zambia was saying that her husband did not want her on social media. As far as he was concerned, social media corrupts women, and so she was prevented from using social media even to interact with her customers. So there is evidence to support this gender digital divide. Women in sub-Saharan Africa, they are about 10 to 30 times less likely than men to own smartphones or to access the internet. We also found that in some countries, the gender gap on internet access exceeds 15%, and only 32% of women in rural Tanzania actually have mobile phones. 68% of Malawi women lack digital skills training. There's also the perceived economic value. Not every woman thinks that there is value in adopting technology to the business. So the cost of adoption versus the returns for them did not make sense. So they were quite reluctant to invest in that direction. There's a cultural compatibility which we found. So adoption is higher in women networks, okay, and its role and women's roles and social norms. There's also the peer support. Networks and digital communities facilitated learning and confidence. So in societies where they had these peer groups, they were more likely to adopt because they found that as they talked to other women in those groups, they found reason to do what other people were doing. We found structural barriers, which was a very persistent issue across all of the 7 countries. And also we found issues of infrastructure and lack of electricity was persistent among all the countries. The issue of trust was also there. There's a lot of issues on social media and people's data being lost and all that. So trust was a big issue, particularly for 4 of the countries that we surveyed. So here are a few quotes from the women. So one woman from Kenya says, by using M-Pesa, I could receive payments from customers faster, even those who don't come to the shops. Sometimes I need to ask my husband to use his phone to check prices because I don't have one that connects to the internet. That's from a lady in Ethiopia. Another one from South Africa said, we teach each other. If one person learns, she shows the others how to do it. And somebody from Zambia said, data is too expensive. I have to choose between buying food or buying airtime. So from this study, we made some propositions. One of them was that economic value and compatibility will drive adoption. Another proposition we made was that peer networks and social learning are critical to uptake of digital technology. We also came up with the proposition that structural barriers and affordability persist despite the interest of women to adopt. And trust and legitimacy matter within communities, and NGOs should endorse the increase of adoption as part of the projects that they are doing. And we also say that gender-neutral policies often miss women-specific barriers. A lot of the women agree that some of the companies that offer all of these things want to support women, but they don't have enough incentive to be able to do that. So in terms of policy and practice recommendations, we suggest that number one, they should invest in digital infrastructure, particularly in the rural areas where there's less broadband and there's less reliable electricity. We also suggest that they develop public/private partnerships to make adoption more affordable and accessible for women. And we need to promote digital literacy, particularly undertake skills training for women to be able to understand how to adopt. One of the outcomes we found from this study was that a lot of women lost their businesses during COVID because they trusted people to help them to run the business, people they considered to be digitally savvy, and in the process, they lost their businesses to those people they brought in to help them. So digital literacy will help bridge that gap, and ensure that women no longer lose confidence in running their own businesses. Support community-based broadband and peer-led initiatives, and also design gender-sensitive digital inclusion policies that will address these issues over time, particularly issues of poverty, affordability, and safety. So how do we bridge this divide? Everybody has mentioned across all of the presentations, the divide exists, the gap exists. Bridging it will be a matter of collaboration among policymakers, industry, and also communities. Bridging the divide also means that we need to have contextual approaches, gender-sensitive interventions that will actually address the needs of women. And in terms of future research, this study was only a qualitative research, and so we could not really bring in a lot of participants, because if we want to focus on rigor, analyzing qualitative data takes time. So we think that a longitudinal study that is mixed method will help to track the impact of some of these policies and see how they're helping women. So in terms of conclusion, digital technology does empower women entrepreneurs. There is no doubt about that. And the gap persists, and that gap needs to be closed. There are structural and cultural barriers that women face when trying to adopt, and there's strong gender-inclusive institutions and policy frameworks that are required to be able to close this gap. So access to funding and digital finance remains a key challenge, and we need peer networks, mentorships, and community-driven models to actually help us to bridge this gap. Thank you.
Thank you, Dr. Bridget. Gender-sensitive barriers needs gender-sensitive solutions, she said. Next, if we could then go back to the organizers at the back, if we can please go back to understanding the diversity and complexity of informally regulated finance. I just need to check if the presenters of that paper, he's here. Come next, please. A comparison of South Africa and Zambia. Do we have the presentation on? Perfect. Thank you so much.
Okay.
Okay, and then as we present, you just go to presentation there.
Oh, thank you. Greetings. I'll cut right to the chase. Thank you so much, Chair. So my name is Mongi Chaka from the University of Fort Hare in the Eastern Cape. So the main reason why I decided to pursue research in this topic is because there seem to be some controversy and misunderstanding around the use of informally regulated financial services. which is reflected not only in the existing scholarly literature, but also in the existing policies, not only in South Africa and Zambia, by the way, but also in the entire sub-Saharan African region, and in fact, in many other developing regions across the globe. So there is this general perception, which is true to a very large extent, that people use informally regulated financial services because the formal financial system is exclusionary. It excludes women, it excludes the unemployed, it excludes the low income and small businesses. It excludes people who inhabit the villages, etc. And this is all true to an extent, to a larger extent actually, but evidence shows that this is not really a complete story, because due to this perception that I've just outlined, it was perceived that if the formally regulated financial system is well developed and its reach is well expanded to include other groups which I've just enumerated, then what would happen is that people would seamlessly transition from the use of informally regulated financial services to the use of formally regulated financial services. And since the 1990s, when the reforms began and the system was liberalized and we had developments such as the microfinance institutions, the financial technology, and other innovations, I'm sure you'd agree with me that financial inclusion in many developing countries has increased significantly. But surprisingly, what we've seen is that the use of informally regulated finance has also increased alongside the increase in financial inclusion in those countries, in South Africa and Zambia, in many other countries, and that is an anomaly. And that shows that really there's something that we do not understand about informal finance, and indeed there is a need for a more nuanced approach to try and understand how this really works. And so I worked on a study, and I did interviews, semi-structured interviews in the Eastern Cape, in the villages and in some townships in the Eastern Cape, as well as in Joburg, and also in Zambia, in Lusaka, just for purposes of comparison. And I focused on 5 main aspects of the financial system or financial landscape, which is payments, remittances, savings, credit, as well as insurance, right? And what I've found is that people largely rely on formally regulated facilities for making payments and remittances, right? But they use a lot of informally regulated facilities when it comes to risk mitigation or insurance, when it comes to savings, and also when it comes to credit, right? And they actually use a set. So when they got access, some of them, because it is true that most people who use informally regulated financial services are those who are excluded. But there are those who are not necessarily excluded, who actually choose to use informally regulated financial services, because sometimes, even when you have access to the traditional banking services, sometimes it makes sense for you to use informally regulated services. I'll make an example. So what I found when I was doing the interviews is that most people who use informally regulated financial services are those who require, I'll speak about credit firstly, as those who require small amounts of credit. Maybe you just someone who's struggling to make it to the end of the month. Maybe they need to borrow money to top up their grocery money, to top up their electricity, or to deal with or to pay for their medical expenses that they couldn't anticipate. And the list of these examples is endless. And this becomes a perpetual cycle where someone on a monthly basis for one reason or the other struggles to use his salary or his SASSA grant or whatever to make it through the end of the month. And they constantly have to go back to whoever is the source of their funding to borrow more and more money. And I don't think a bank would be willing to give you money every month. And even that money is very small. It's just maybe 50 rands, 150 rands, etc. So the informally regulated financial services system offers mostly services that the traditional banking systems cannot profitably provide to those who need them. So another main point is that I noticed that people find it easy to borrow from informally regulated financial services, and I think it's for reasons that are already widely documented in the literature, the issues of the requirement of a collateral and other restrictions that are well documented in the literature and that are well known. But also interestingly, they find it much easier to save through the banks. Even the informally regulated financial institutions, your stockfels, your money lenders, and all of them, they save their money. They actually use the digital solutions that have been provided by the traditional banking system to actually save the money in the traditional banking system. But it also depends on how much money you want to save and how long do you want to save it. Because if you want to save in a bank, the bank will say that in order for you, for example, if you want to open a tax-free saving account, it has to be for a minimum of 7 months. And a lot of people often want to save their money maybe for 3 months or for the following month. And the bank will not allow. And if they do allow you to do that, they will charge you interest when you withdraw that money. And people do not want that. They think it's a scam. So people actually use a diverse set of both informally and semi-formally regulated system, and they actually are rational in their decision. They actually look at the benefits and the costs that are associated with each option. They don't choose informally regulated, some of them, necessarily because they are desperate and have no other option, but sometimes it just makes sense to use informally regulated financial services. So I'll just skip to, okay, another point which is the last one on the key finding is that, and I think this is a well-known and well-documented fact, that the informally regulated financial sector is dominated by women, right? It's dominated by women, and so one of the main recommendations that I would like to make here, which I may not even have written in my slides, is that if anyone cares about women empowerment and women inclusion, then they must support the informally regulated financial system, because this is where you find women. This is where you find programs and financial institutions that are actually led and dominated by women. So another recommendation that I'd like to make is that all forms of financial services, they must be supported, they must be encouraged, and not be stigmatized, as it has been the case, especially in South Africa. And I think South Africa can learn one thing or two from Zambia, because in Zambia, what I found is that there's a more positive recognition and support for informally regulated financial services. And if you go there, you'd find that they're actually thriving. It's easy in Zambia to find. You can just go on the internet and search, and you'll find an informal money lender there with all the interest rates they are charging and other details. And you can call and link up and get a loan or whatever. But in South Africa, they are considered as illegal, right, in South Africa. And they're associated with all sorts of negativity. And I think the main part of that negativity, by the way, their abrasive nature, as well as their violence sometimes that they are often associated with. I think it's because, I think it would be minimized if not, it would be minimized if they would be legalized, because at least they would know that if someone doesn't pay, at least there is a legal recourse that they've got access to, and then there wouldn't be a need for them to do the violence that and other abrasive approaches that they often take in order to enforce compliance. And then I'm just skipping, so that's my last slide, so I'm just skipping some of them that I think are not more important. So another thing that I've noticed in South Africa is that formal financial development and some of the tools and products that it has come up with, instead of discouraging and screening out the use of informally regulated financial services, it has actually aided it, right? People are now using the tools provided by the traditional banking system to participate even more in the informally regulated financial landscape. Isn't that interesting? And that's why we've seen the use of informally regulated services increasing alongside the use of formally regulated services. And so the main recommendation that I would make is that all of them, and when I say all of them, I mean it, all forms of informally regulated financial services, they must be promoted, they must be supported, they must be embraced. And in fact, their integration, we must encourage their integration to the formal banking landscape and actually strengthen their synergetic contribution to financial inclusion. And that's how, by the way, you are going to get financial inclusion that is defined by increased use and not just by increased access, as it is the case, especially in South Africa, because South Africa is very proud that it has achieved very high financial inclusion. But if you look closely into that, you find that it's access. It's because they count how many people actually have opened bank accounts. And you find that many of these people, it's just people who have to open the bank accounts because they are forced to do so because their employer will not give them their salaries if they don't have bank accounts, or they are not going to be able to receive their, they have to have the bank account because they have to use it to receive their SASSA grant, and that's the only thing they use it for. So there's a huge gap between use and access. And if you support and and integrate the informally regulated financial landscape to the formally regulated financial landscape, and you try and strengthen their synergetic use, then you'll achieve real financial inclusion that is actually defined by use, not just by access. Thank you so much.
Thank you, Mongi. My apologies. Due to the morning delays, we still have another session. If I could ask the presenters to please keep it to 8 to 10 minutes at most. We still have another session. I'm also asked to apologize to all the presenters of this session. We are unfortunately not going to be able to have the Q&A session after the presentations because of time constraints. Next, we will have the policy and regulatory frameworks for gender finance in South African tourism industry. Ndate Malifani, it's your country, enjoy it, right? That's your tagline. Come through, sir. Please welcome him.
Thank you, Chair. I would have wished that you could have Lily for me as well, but that will save for next time. Due to the time, Chair, I'm going to try to be very concise and very straight and forward. And that is actually what comes with the burden of being the last speaker. Good afternoon, ladies and gentlemen. I'm Dr. Malefani Stephen Munyani, and I'm from the Tshwane University of Technology. I am going to talk about the policy and regulatory frameworks for gender-inclusive finance in the South African tourism industry, and my study look at the impact over a period of 30 years. And the reason why I looked at this study, this was influenced by the 30 years of democracy that our country, South Africa, was celebrating from 1994 up until 2024. I therefore took an opportunity to look at what is the impact of regulation and policy on financing women tourism activities in the country. I would summarize my presentation into introduction, theoretical frameworks, findings, recommendations, and a future research approach. Generally, it is being said that there is access problem among women in South Africa and in the world. And these inequalities, it is because of the policy, including the lack of implementation of financial empowerment for women. And these gaps are caused in part also by bureaucratic delays, ignorance, and limited capacity inside financial institutions. So I am going to quickly go to my findings, and I'll base it on the South African tourism business financing from 1994 until 2024. I would look at the government, I would look at the banks, and also the investment side. The period of 1994 to 1999, the government grants and public funding, at that particular period, it was the time that transformation was just beginning, that is post-apartheid. So there were few tourism support and grants. And in terms of the gender profile, tourism enterprises were predominantly male-run. No specific grant program for women existed yet. And in terms of banks and loans and credit, the access to bank credit for black tourism entrepreneurs were very limited. And gender profile, given overall SME trends, the majority of tourism business loans went to male entrepreneurs. And in terms of the private equity and investment deals, there was negligible black ownership investment occurred, and there were no major private equity or BEE deals in tourism before the year 2000. And in terms of the gender profile, it is presumed that virtually all investees were white male-controlled companies, since black or female-led tourism firms rarely attracted investors in the 1990s. And between the period of the year 2000 to the year 2004, in terms of government grants and public fundings, the racial profile dedicated support for black entrepreneurs emerged. The Tourism Enterprise Program, TEP, launched in 2000 to assist historically disadvantaged black-owned tourism SMEs. And by the year 2004, almost 72% of historically disadvantaged entrepreneurs were supported. And in terms of gender profile, most beneficiaries of early programs were black male owners. Women's share was low, though women-owned tourism business were very few. And in terms of bank loans and credits, the racial profile, gradual improvements in credit access, some banks began SMEs loan initiatives, and there was cooler loan guarantees supported a handful of black tourism entrepreneurs. But when we look at the gender profile, financing continued to favor male-run firms instead of black women entrepreneurs. Then in terms of private equity and investment deals, when we look at the racial profile, this is the period where the first policy and regulation on BEE equity deals appeared, and empowerment investors took minority stakes in established tourism companies, for example, partnerships of hotel groups and game lodges. So in terms of gender profile, minimal female participation in equity deals was realized. Virtually no significant tourism investment was directed to female-led enterprises during this period. And the period of 2005 to 2009, the government grants and public funding, racial profiling, government funding scaled up with BE targets. The Department of Tourism, then the Department of Trade and Industry introduced Tourism Support Program, the TSP, grant in 2008 to spare capital investment for previously disadvantaged owners. So gender profile, women share slowly was rising. The amended BBEE codes in 2007 highlighted black female ownership. So here we can see how regulation was playing a role to make sure that there is impact in terms of women support with finances. So in terms of the back loans and credits, the racial profiling under the 2004 Financial Sector Charter, banks committed to improve black SME and financing. And also we see how regulations played a role to ensure that there is an increase in the banks supporting entrepreneurship. And in terms of the gender profile, persistent gap, women entrepreneurs remain a small minority of borrowers, but financing was still dominated by male-owned enterprises. And in terms of private equity and investment deals, in terms of racial profiling, there was a rise of BEE deals. Several high-profile empowerment transactions took place, but by 2010, the hospitality subsector approached 40% black ownership, or on average. In terms of the gender profile, black women still were underrepresented and did not benefit much. And between 2010 and 2014, government grants and public funding in terms of racial profile, it continued. Public financing for inclusive growth, the Tourism Enterprise Partnership, or the TEP, and other Department of Tourism initiatives provided business support grants, services to black SMEs. And in terms of the gender profile, there was an incremental improvements in terms of women in tourism started receiving targeted support. And bank and loans and credit, racial profile banks on DFIs stepped up SME lending post-recession, aligning it with BE goals. And gender profiling, male-centric lending persists, and women-led tourism business were still less likely to obtain bank credit. So private equity and investment deals at that particular time, racial profile by the mid-2010s, tourism triple BEE efforts yielded modest gains in ownership. The Tourism BEE Charter Council 2015 baseline found that about 30% to 40% of large tourism enterprises had achieved the target of 30 black ownership. Now let's look at the impact on women. There was a slow change. Black women equity in tourism companies inched upwards but stayed low. By 2014, only 11% of hospitality companies had met the 15% black female ownership. And by the year 2015 to 2019, the government grants and public funding in terms of racial profile, this period saw now government financing program explicitly targeting black participation, most notably the Tourism Transformational Fund. And also here, it shows the power of legislation and policy. And then gender profiling, women's empowerment became a core focus. The TTF and other schemes set a goal of 50% women beneficiaries. The Tourism BEE Charter Council noted some progress. The travel subsector had relatively higher female ownership participation, about 32%. So there was an increase in terms of the government's grants and public funding during that particular period. So in terms of bank loans and credit, more robust financing pipelines developed and banks continued SME leading, and gender profile targeted lending slowly increased for women, and late 2010 saw the rise of women-focused initiatives. For an example, Isivande Women Fund and various bank programs for women SMEs in South Africa. And then private equity investment deals, racial profile private equity and investment deals in tourism continue to advance transformation, but very slowly. And in 2019, several major tourism groups reached significant black ownership, like Suhosan was 30% black owned. In terms of gender profile, greater inclusion, but still low, black women began to feature in more ownership structures. Then by the year 2020 to the year 2024, the pandemic happened, and in terms of government grants and public funding, Tourism Relief Fund had 200 million issued once-off grants to 4,000 tourism SMEs to survive the pandemic, and 66.9% of these approved grants went to black-owned businesses. So in terms of gender profile, emphasis was on women, and the COVID Relief Fund, for example, reported 32.8%. So bank loans and credits during the COVID period, the banks were very reluctant to offer loans. But however, globally, women and minority entrepreneurs face more difficulty raising venture financing during this time, and South Africa mirrored this particular trend as well. So this was not only exceptional for women, but for everyone. And in terms of private equity and investment deals, racial profiling, despite COVID disruption, some private equity deals proceed to transform ownership. The tourism transformation funds essentially function are equity investment, resulting in new black-owned hotels, resorts, and attractions. So as of 2024, there is no comprehensive excess of female ownership share in all tourism businesses. But however, the anecdotal evidence and BEE certificates suggest that it remains in the range of 10 to 20% for most large entrepreneurs. So there is still much that needs to be done in terms of ensuring that women are included in terms of financing, investment, and the government's grants, especially in the tourism sector. So the theoretical framework of the study, it anchored on gender and development, GAD theory, and this study emphasized the need for tackling structural inequality that marginalize human economic activities. And the material and methods, the study used a desktop quality analysis based on secondary data, and this method was chosen to examine the body of current research, including response extensively, and the data relevant to gender-inclusive finance. And then, in summary, the results of the study show that women in the tourism industry still face significant obstacles to access financial resources, despite growing policy meant to support gender-inclusive finances. And on the recommendations, a multi-stakeholder strategy, including governments, financial institutions, civil society, and international organizations, it is very important to ensure the women inclusivity. So for this research in the future, the research will look at intersectional analysis, which will be based on particularly among unofficial or community-based operators, investigate how race, gender, geography, and class interact to affect women access to tourism finance, and will also look at comparative policy models, analysis effect gender-inclusive finance projects in other post-colonial nations such as Kenya, India, Rwanda, to pinpoint replicable policy frameworks, and then lastly, the impact evaluation to track the success of current initiatives, including the Women in Tourism program and the Tourism Transformational Fund. Thank you.
Thank you to all the speakers. Again, my humble apologies to everyone here in live streaming. We were meant to have a discussion session to just pull everything together. And like the earlier MC said, to also give women outside this room, and that are not academics, as so what. But I do hope that we have taken some takeouts. I think one of the takeouts is definitely collaboration is needed. This marks the end of this session, and I'm looking around in the room because I believe we have the last session, and there's a different chair for this session. I thank everyone for being patient with us. Thank you.
Thank you, everyone. I think we are getting to the last session, which we will try to ensure that we keep it to the point. We will have the Graça Machel Foundation coming and then just dealing with it. Do we have the person who's supposed to do it? I will not call the panelists. She will do the deed. Thank you.
Good afternoon, everyone. Good afternoon. I hope you're still awake and ready for the session. I think I heard Wade said you saved the best for last. So I hope in this case it applies that we've saved the best for last. I want to welcome you all this afternoon to our session. This is a session on mainstreaming the priorities of women, youth and persons with disabilities within financial inclusion and economic empowerment frameworks. This afternoon, we're going to bring to you leading voices and institutions working on the front line of this agenda. At this point, please allow me to introduce to the panel my esteemed panelists. I'm going to begin with Ms. Shifra Chisha, who's representing the Graça Machel Trust. She is the Director of Programs. I then would like to call to the stage Ms. Juliet Miner from the United Nations Development Program. And last but not least, I would like to welcome Ms. Ayanda Mvimbi from the UN Women. While Ayanda is just coming to the podium, I'd like to just give a brief of what we are trying to achieve in this session. We are hoping to address the exclusion of women and youth, and persons with disabilities from financial systems. This session has been organized by the Graça Machel Trust, and it aligns with the G20 Women Working Group, as well as the African Women's Decade on Financial and Economic Inclusion 2020 to 2030. We hope through this session to really elevate and bring practical solutions that contribute to inclusive policies, financial systems, and care infrastructure. So at this point, I am going to hand over to Ms. Shifra Chisha from the Graça Machel Trust to just give a bit of a detailed overview on what we are trying to achieve in this session. And then I will also at this further then request my esteemed panelists to introduce themselves after that.
Thank you, Thelma. And Shifra Chisha, I'm Director of Programs from the Graça Machel Trust. As Thelma has mentioned, that we are looking at financial inclusion, but particularly I think today we'll be looking at financial inclusion in the case of South Africa. The Graça Machel Trust recently concluded a study on looking at the financial inclusion policy in South Africa and the state of women entrepreneurs in South Africa now. And I think what we are going to discuss is really how does this influence policy, or how can we look at policy in relation to where we are as far as the policy is concerned. Now, just brief introduction that I am Shifra Chisha. I am the founder of the African Women in Business, which is represented in 11 countries, and also looking at investments in 8 priority sectors and those that are identified by the African Continental Free Trade. I'm also the founder of MKT Investment. Over the past 20 years, we have been looking at mining communities and how to build sustainable mining communities within South Africa. And the reason that I'm here today, I am the Director of Programs for the Graça Machel Trust, an entity that has, over the past 15 years, been looking at how to remove systemic and structural barriers for women and girls and people with disability in the region. We are represented in 20 countries, and we have networks that we work with in 20 countries. We look at 3 areas and priority areas, which is adolescent girls. I think we've had a discussion from the panelists and the speakers today, talking about the importance of us looking at adolescent girls, children out of school, and children that we are working with, our child brides, and a whole lot of other challenges that adolescent girls are facing. We then look at a second priority area, which is women's economic advancement, which is an area where we look at entrepreneurs. How do we assist and work with entrepreneurs? But most importantly for us, how do we influence policy so that it can be able to assist women, so that we can be able to assist women? And lastly, we look at, I think one of the speakers mentioned networks, and somebody mentioned digital networks. How do we work with the networks of women in different countries to make sure that we have collective action? And I think what has been mentioned again, Thelma, today has been collaboration, collaboration, collaboration. Our founder usually say that with 100 fragmented voices, we will not go anywhere. We need a movement. I think there has been a lot of discussions today about what the gaps are and where the gaps are, where policy is succeeding and where policy is failing. And I think we will touch, as the speakers today, on how we can be able, or what are the things that are being done by civil society, by private sector, and by government to bridge those gaps. I'll pause there, Thelma.
Thank you so much, Ms. Shifra. I will hand over to our next panelist to introduce herself. Juliet, we can start with you, and we can move to Ayanda.
Good afternoon, everyone. My name is Juliet Minor. I work with the Better Than Cash Alliance. The Better Than Cash Alliance is a UN-hosted alliance of governments, private sector players, and various entities that look towards digitizing cash payments. So as the name suggests, Better Than Cash, we're looking at all the benefits of digital payments, digital payment platforms for women, for youth, and beyond. So today we're here to talk about the policy aspect of that, and I'm happy to be here.
Over to you, Ayanda.
Good afternoon, colleagues. My name is Ayanda Mvimbi. I work for UN Women, the South Africa Multi-Country Office, which operates in Botswana, Eswatini, Lesotho, Namibia, and South Africa. And I am the Women Economic Empowerment Specialist. Thank you.
Thank you so much. So just moving on with our session this afternoon, I'm going to pose a few questions and just get our panelists to answer some of the key questions that we have around financial inclusion of women, youth, and persons with disability. I'm going to start with you, Ms. Shifra, and my question to you is, what are the most impactful policy levers to advance inclusive finance for women, youth, and persons with disabilities?
Thank you, Thelma. The third pillar that I've mentioned for the Grosser Marshall Trust has been women's economic advancement. So we have looked and have done quite a lot in advancing women, especially women entrepreneurs. We have currently looked at, touched about over 3 million women within our women networks, and also capacitated or provided capacity building for over 5,000 women. We have created youth jobs within the space where we operate, but our target is to look at 100,000 women. The impact that we're looking at, it's not only capacity building, the impact that we're looking at is about these women creating $10 billion in revenue, and also creating about 2.5 million youth jobs. That for us will be the impact that we're looking at. And I think the experience that we look at is when we look at a woman like Esther, who is based in Tanzania, who started the program of capacity building with us a couple of years back. Her turnover was about $30,000 or 540,000 rands. And she is now looking at $1.5 million turnover or 227 million rands. And she started with 4 staff members when we started capacity building, and she's now sitting at 24 direct staff members. But she also is impacting and influencing and assisting community at large, and also supporting some small entrepreneurs within the area. So that for us is what we are looking at. And I think Prudence in the morning talked about Wi-Fi. Thank you. Prudence in the morning talked about Wi-Fi, which is a program of the African Union, and that for us is what defines what Wi-Fi needs to look like. In Zambia, for example, we started with one woman who was developing and making seed production, but now she's working with 3,500 farmers or women farm owners. So that means that the impact is way beyond what she is doing. In Tanzania, we started again with one woman who was a woman farmer on seed production. She's now working with 5,000 additional farmers. This is the impact really that we are looking at. But now let's go to Thelma, I'm old school, so look at what I'm carrying. But let's go to policy levers. And I'm not going to talk to policy levers because I think the academic presentations that were done before us have really touched extensively on where the gaps are and what we need to do. And just to look at policy, that it must prioritize localized, gender-responsive financial infrastructure, rural and peri-urban areas. We need to look at gender-responsive financial sector. We need to look at inclusion targets. We need to look at incentives that we can look at for banks so that banks can look at the underserved groups and support innovation like mobile money and alternative credit scoring, which again the speakers have spoken extensively to some of these credit scoring. I know in Rwanda, for example, one of our DGs looking at the alternative credit scoring. We're looking at the as form of the collateral. But as we look at these, what is it that can be done? And I think what also has been mentioned was the data disaggregated, or gender disaggregated data. And I'd like to make an example of the Zimbabwean Reserve Bank, because they looked at this a couple of years back. And it assisted them to look at, with the deputy governor that is based there, it actually assists them to form gender desks within the banks, and it assisted them to form their financial inclusion strategy and policy. So these are some of the things that we need to look at in different countries so that we can be able to influence what we are doing in our country. Also in other countries such as Cameroon, where they've formed their own community currency so that women can be able to provide and be able to get that access. But again, as I'm saying that, as we look at policy, one of the things that we do, so the structure from the GMT perspective is that we have the deputy female governors of central bank and reserve of central banks, and some are current and retired deputy governors. The aim is for them to look at policy and influence policy. In a year, they have annual sessions, which are convenings, where they look at policy briefs and how they're going to influence policy. We then have women in finance in different countries, and the women in finance are to look at how do we disseminate that policy so that the women on the ground can be able to benefit on that. They form communities of practice so that they can be able to disseminate that. That's step number 2. Then you have the women entrepreneurs who are the evidence for us on whether these are working or these are not working. And we are proud to say from the funding that we've received from our donors, I'll make an example, MasterCard Foundation funded us about $9 million. We have raised rand for rand access to women for their businesses. So this is the work that we have done, and I think from the policy perspective and the policy levers, that is what we need to look at.
Wow. Thank you so much, Ms. Shifra. There were quite a few key points that you raised there. I picked on the work that is being done by the ELG, which is really working around policy and making changes for women, as well as data, how we can use the data to inform the decisions and the policies that we are putting in place. I want to just pose the same question to Ms. Juliet. And I really want to just get your sense around that. What is the most impactful policy levers to advance inclusive finance for women, youth, and persons living with disabilities? Thank you so much.
Okay, thank you. So I think before I go into the policy levers, I think one thing we've alluded to is policy is not enough. And so when we're thinking about policy, it's important to think about the process of developing the policy. Is it consultative enough? Is it representing, all those marginalized groups that we're trying to address? Do we have the right buy-in at the right levels for this policy to be successful? And so I think we try to take a bit of a backward, can I say, approach, where we kind of start with the user in mind. We start with the woman, the youth, the border communities, for example, and we really try to understand what are their problems. And so in that policy development process, we start with them, we then engage the regulators, the policymakers, the financial service providers. We try to start by bringing the ecosystem together. And I think this is a way of informing policy that's very practical and turns out to be quite relevant. And then the fact of buy-in, because another issue that comes around with the policy implementation is political will. Do we have enough political will? Do we have the right, stakeholders on our side? And so with this process, we can now speak to the actual challenges. And another approach that seems to be quite effective is thinking about test and learn approaches. So in a bit, we'll maybe talk about regulatory sandboxes, proofs of concepts, where we're able to actually launch what we think are good solutions for certain groups, allow the market to kind of run itself, regulate itself, and then take it back to the policymakers and the regulators and build for it. So it's kind of like a bottom-up approach, but we do, of course, appreciate that there is a lot of policy in place. And I think just to speak to some of the levers, of course, data and gender disaggregated data mandates are extremely important. I think in what is already in existence, we're thinking about tiered KYC that allow women and youth that do not have the requisite documents to gain access, at least to basic financial services, even if it's at a peer-to-peer level. We're not asking for direct access to loans or credit, but at least if we're able to digitize even wages or payments, then you already improve or start to improve the lives of some of these women. And then I think from a broader perspective and even cascading down from a continental level, we're thinking about DPI, so digital public infrastructure. How do we think about digital payments, digital identity, and cross-border data sharing in one bucket? And I think the key thing about DPI is it being a top-down approach, really thinking about the digital economy as for good, rather than thinking about it as a siloed sector initiatives by various ministries. So I think those, I know there's a lots of policies we could speak about, but I'll just touch on those three, and emphasis being on policy development and the post, which is the implementation of the actual policies.
Thank you so much, Juliet. I like a few of the points that you covered. So you structured it around, firstly, we understand the situation. Then we look at the buy-in, the political buy-in. Do we have the political will? Do we have the buy-in of our stakeholders, then we also look at the technology that we can utilize to achieve our success. So thank you for that. I want to move over to Ms. Ayanda and just ask you around how can care infrastructure investment help address time, poverty, and boost participation?
Thank you so much, Thelma. I just want to start by saying that the reason why we are talking about care infrastructure is because we do realize, all of us, that without addressing this issue, we're not going to reduce the gender gaps in wealth and income. And if we don't reduce gender gaps in wealth and income, we're not going to be talking about financial inclusion of women. And if we're not talking about financial inclusion of women, we can forget about sustainable development goals. I think you saw the presentation this morning highlighting how far we are in achieving that. The second thing that I want to say is that someone was reminding us that when you're talking about entrepreneurial ecosystem, we're not talking about isolated policies and programs. We're talking about a combination of all the different activities, including policy, finance, markets, human capital, and all of those. So if we work in a context where most women are doing unpaid care work, and our interventions are not really thinking about ecosystem approach in addressing that, we're not going to be addressing. And so the issue of care infrastructure and reducing time poverty is important. And I just want to say and remind you that the time that we have to come and speak here, to attend this meeting and to do other things is our capital. So as women in our communities and the households, the time that they use to do unpaid care work is their capital. And care work is so valuable that it consists of 16.9% of GDP worldwide. So it is a lot of contribution to the economy and how we survive as an economy. And the work that is done in the households, voluntary work and in community, is largely unpaid. So women are using their time to service different parts of our community in order for children to go to school and for people who are sick to be taken care of, and other are very important. The implications of this is that it really impacts on their ability to have time to use it to generate income and build their wealth and increase their income. But there are also long-term implications in terms of wages, pension, resulting in lifetime of poverty. And what I want to highlight this, and I just want to remind us again that in 2015, UN Women did this report on World Women's Report, where this report highlighted care infrastructure as a critical enabler for women economic empowerment. So some of the examples are investing in time-saving care infrastructure like child care centers, elderly care centers, health support, and all of that. But also we need to think about public investment in care services, which will improve participation in formal economic activities for women. And it is important that when we think about this, we ensure that they are reliable and sustainable, because that will enable women to grow and formalize their businesses if they want to. But also, we all can count the huge economic and social benefit that this will bring in reducing economic inequality and building thriving economies. I just want to share some of the few recommendations. And also before I do that, IDRC and GROW did a very good study in 2021 and highlighting women economic empowerment. It was done in Kenya, Tanzania, and Uganda. And they looked at the childcare and cooperatives and how they significantly increased women's time for entrepreneurship and income generation activities. And the last thing that I want to say, Chair, is that I encourage you to look at the UN system guidelines on transforming care systems, which contains very critical options, and I would like to highlight a few for consideration. We need to just collaborate to ensure that we recognize this care because it is critical, but also we reduce it through infrastructure that I have mentioned. But also we need to ensure that this is redistributed within the household. But we also need to look at how we integrate care services in economic and small enterprise development strategies in the different contexts we were operating. And I also want to just remind you what the minister was saying to us this morning about gender responsive budgeting, and care infrastructure needs to be framed within gender responsive budgeting and the entrepreneurial ecosystem, as I have mentioned. Thank you.
Thank you so much, Ms. Ayanda, and thank you for touching on some really key points around a holistic approach to interventions that look at the whole ecosystem, as well as just ensuring that there is public investment, right? Thank you so much for touching around care. We don't have a question and answer session, but we would really like to continue the conversation. So hopefully, as we continue to interact, we'll get opportunities and you can interact with the different panelists. I'm going to just go into the final round of questions, and I'm going to ask my panelists just to keep it to the shortest time that you can, because we are behind time, and then we will be concluding the session. So I'm going to start with Ms. Shifra, and I'm going to move to the second question that I would like you to cover, which is, can you share a scalable model of intervention that effectively supports women, youth, and persons with disabilities?
Thank you, Thelma. And I've mentioned a program that we do, which is a Women Creating Wealth program, where I said we are looking at 100,000, target is 100,000 women, and creating $10 billion and also creating 2.5 million youth jobs. So that is scalable. And we have seen that model just in about less than 2 years. We've already touched 5,000 women. They've created over 20,000 youth jobs, and we've seen the turnovers that are coming out from the women. But what I wanted to say is that it is not only capacity building. It is a 360 model. It is capacity building. Somebody this morning was talking about mentorship and coaching. We do have intense mentorship and coaching. We have trained them to be investor ready, to be able to pitch in front of investors. We also get to the next point where we look at access to finance as well as access to markets to make sure that the women have a holistic picture and holistic assistance. Now we have in South Africa, lucky enough to have the Women's Economic Assembly that is already looking at preferential procurement and how women can be able to access opportunities. And we are hoping the region will have the same. So I think those are some of the scalable models. But again, somebody this morning talked about the leadership. One of the things that we do at the Graça Machel Trust is to make sure that there's transformation around the leadership of the financial services sector. You cannot have somebody who doesn't look like you talk about you. So we really need to make sure. I'll give an example of Zambia. Zambia, when we started our work with the deputy governor in Zambia, we had only one woman represented as MD within the financial services sector. We're now sitting at over 30% and over 50% representation at board level. And we really can see how these women are really transforming the financial services products that are going to women, and also the digital platforms that are assisting women. So I think these are areas that are scalable that we can look at as a country.
Thank you so much, Ms. Shifra. I can attest to that program because I am part of that program, but it is shown so much scalability, and I think this is something that we need to continue to discuss. I want to quickly move on without getting distracted to Ms. Juliet and look at the second question around what mechanisms have worked to embed accountability for inclusion in financial systems.
Thank you. So I'll try to keep it short. I think so accountability, we're looking at what frameworks we have in place, what commitments have, I think it comes from both private sector and public sector have made to ensure that financial inclusion is reaching the women, the youth, and the person of disabilities. So a few points have been mentioned. I think data collection is a huge one. You can't change what you're not measuring, and so gender disaggregated mandates for data collection have been shown to really boost this. Examples in Kenya, Rwanda, where you can actually see the numbers and some of the commitments that have been made and how it translates from the FSPs and from the governments in terms of their financial inclusion policies. And then we can also think about some maybe less binding as a regulatory mandate, but public commitments that are made with some of the international institutions, a lot of kind of gender progressive agendas that private sector players can kind of tag onto and are then held to account in the event that they do not adhere to those. We're also thinking about having women in leadership positions. Again, this translates from both a private and public sector perspective. Product development needs to sit with women in those rooms who are thinking about the women's perspective, the women's specific needs. In public sector, if you're thinking about the policy development, you need a woman in that room. When you think about the oversight, they can also quickly pick up what are some of the things that are not being well addressed. And in that way, you're held to account and you're able to actually track and implement change. And then I think reporting of these kind of mechanisms and the implementation, the progress that is going on, that allows for transparency to the public, to your stakeholders, to allow for this. And what you need for that is a good M&E monitoring and evaluation framework that helps you to figure out where the challenges are, to reevaluate, and to self-correct where need be. Thank you.
Thank you so much, Ms. Juliet. I want to just quickly move to Ms. Ayanda in the interest of time to just then tell us a little bit more about what mechanisms have worked. Sorry, is that your question? Sorry, yours is the first question. How do we address the fragmentation in how we treat women, youth, and persons with disabilities in program design?
Thank you, Thelma. I think the first thing is really for all of us to understand what we're trying to solve for employment, for entrepreneurship, for leadership, and all of that. And the second thing is really to understand what are the barriers that each of the grouping, women, and they're not homogeneous groups. So it needs to be as disaggregated as it can be and use that data to inform policies and strategies and so on. It can be, we've seen many examples where it's a blanket approach, and we've seen the impact of blanket approach that it doesn't yield to anything and any lasting change. So it's really important for us to get our data and make everything count. And if we are clear about that, we are able to come up with strategies that will enable us to address the real problems that we are to. So data.
Thank you so much. I want to, in closing, just call upon my panelists and ask them to just give us their closing remarks. In that, I will ask for Ms. Schiffer to give us an overall call to action. I'll ask Ms. Juliet to make a call to action to our policymakers, and I'm going to ask Ms. Ayanda to make a call to the UN and to the public sector at large around policies, just in real brief, like a sentence at best. Thank you.
Thank you, Thelma. I will try to do it as you give a sentence. I think when I started, I said our founder usually say with 100 fragmented voices, we will not go anywhere. We need a movement. Today we listened to the challenges, to the gaps, to where we are and why we have not achieved what we want to achieve as far as financial inclusion is concerned. We all know, and I don't think anybody today can say there's something new that I had. There was nothing new, but what is the solution? We need to collaborate. We cannot do this without policymakers. We cannot do this without our government. We cannot do this without private sector. And I think the models that have been used need to be scaled. And I always request WICONA to go to the region so that we can make sure that there is this element of preferential procurement that is access to markets for women. So I think that collaboration is the key.
Thank you, Ms. Schifra. Collaboration, collaboration, collaboration. I'll move over to Ms. Juliet in a sentence.
So as I close, I'd like to draw our attention to the UN Principles for Responsible Digital Payments. And we also have a 10-point action plan for reaching financial equity and equality. So I think these are some really good principles to look at prioritizing women, inviting women to the table. And remember, with this in mind is to think about the woman in mind. And we're thinking about not financial inclusion for inclusion's sake, it's for the empowerment, for the dignity, and for the prosperity of women. Thank you.
Over to you, Ms. Ayanda.
Mine are two, Thelma. One is we really need to invest in data so that we can make informed policy decisions and programming decisions. The second one is I'm calling all innovators to think around this issue of care infrastructure and entrepreneurship and see what we can put in place as a legacy project for this G20. Thank you.
Thank you so much. Thank you. Thank you. Mine is just now to end our session. I want to really thank you for giving us the last of your attention. I'm sure there's still a little bit that was left for us. Thank you so much. I hope that this session not only informed, but also created the right intention that was to provoke you to action, to allow you to think through what we need to do. I want to thank my esteemed panelists, and I want to hand over now to our chair. Thank you so much, and good afternoon.